Good morning. This is Derek Taylor with the Collective Trade House. Today we are starting a three-part series on structure. This is basically for the new or novice going into intermediate training. A lot of new traders have an issue with identifying certain things to help them enter and exit trades properly. What we're going to do or today in this or the start of the three-part series today, we're going to talk about what are some major things that people have when they're trying to determine whether or not to get in and out of a trade. Here are some things that I want you to understand. In order to be a good trader, you need to know when you're getting in and when you're getting out. In order to understand that, you have to be able to locate price. You need to be able to identify support, resistance, and structure. And you have to have the ability to recognize increased levels or decreased levels of volume. Volume equal money. How do I know when it's time for me to get in? Well, one thing for sure, if there's no money in the market, unless you got $1 billion walking around in your pocket, if there's no money in the market, then you don't put your money in it either. So those are the things that we want to be able to discern, and that's what we're going to do over this three-part series. Okay, so let's get into it here, and let's take a look at a classic example of what consolidation looks like. Now, remember, price can move in three different directions: up, down, and sideways. Sideways movement is called consolidation. There's another thing also that can help you recognize consolidation is straight lines. This is the 50 moving average, this white line here. This is the 200 moving average, and see how they're straight. They are signaling a straight line. They are signaling consolidation. Remember, consolidation equals a straight line equals a change in direction. So I know that there's going to be a breakout here. I just have to wait for it, right? So the other thing is when I locate price, there's a question that I like to tell students. There's a 1A and a 1B. 1A is, do I have space? Well, here is current price here. This is structure or an impediment, right, for the upper movement to continue. So do I have space? No, I do not. Do I have volume? I can tell if I have volume by a couple of different things. Number one, the size of the candle itself. There's no volume here, right? But the other thing too is the fact that, see this green line here? This is what we call the 5 moving average. Moving average is giving us the price of this particular pair over the last 5 days. This is also called the nickname of the money line because it follows price. This orange or this red line here, this is called 13 moving average. Same thing, but over the last 13 days. But I bring these two up because they work in concert together, showing us when there's increases or decreases in volume. So for instance, look at this space here. See how wide this is here, right? See how this wide? This is showing me there's a lot of volume here on the downward movement, right? But here in this case, when price comes down, you see how close they are together? There's no money in it. And you can see by the size of the candles as well. So as I move up here or price moves up, we can see a small separation, but not enough for us to even think about getting into the trade. Now, so here we have straight lines. Price is stuck in here between significant points of structure. Yesterday's low, yesterday's high. This area of resistance here, or this supply box, this demand box. So price is trapped here. If I would add fractals, they would look like called the jaws of death because price would be in between them, and the fractals look like teeth, right? So what do I need to help me realize that price is about to break out? Well, obviously the movement and the size of the candle. So where do I have space? Or the question you should ask, what do I need for price to move in the upper movement? Well, obviously I need this candle, that I need it to grow muscular. I need more money here. I need for it to get larger. Remember, volume breaks down walls. Volume breaks down structure, right? So I need price to pop out of here. Well, a lot of young traders and I say young, I mean young in experience, you can start trading at any age. But a lot of people say, "Well, I don't want to sit in front of the candle, in front of the chart all day." No problem, right? So what we do here, we set an alert here, right? So when price arrives here, it sends this alert. You can send it. You can set alerts on your phone. You can set them here on the computer. You could change the audible so you'll know when price has hit your alert. Then you could come in and you could say, okay, based on the information I need and a couple of other checks that we need to check or boxes we need to check to get into a trade. Once I do all of those, do I have permission to get into the trade? Yes. If all the boxes are checked, we'll talk about that in part two. So at that point, then I know when I'm getting in, and I just use the next line of structure to set my TP, which is a take profit. So once price arrives in that area of the take profit, it'll kick you out of the trade, but it'll kick you out of the trade in profit. Okay. And once that happens, and once you master that, it is so much easier to get in and out of trades. Matter of fact, you'll be able to take out as whatever you desire once you understand about getting in and getting out of trades. So let's talk a little bit about different elements of structure. So these supply boxes here are elements of structure. These little dotted lines here, these are resistance lines here. These blue dotted lines are support lines. This is a demand box. These are all elements of structure. Flat bottom candles. This is a flat bottom candle. Flat bottom candles, we're only looking for flat bottom candles on candles that are bullish candles. I'm not looking for flat bottoms on bearish candles. Bearish candles are these white candles. But what I am looking for in white candles are flat top candles. Like this is a flat top candle here, right? I would actually mark this candle here. Bam, right? And now you see this line coming all the way across. Look where price rejected here. Right where that line of structure is that's highlighted by that flat top candle. And why are flat bottoms and flat top candles significant? Well, flat bottom and flat top candles are significant because of the fact that they either signal the start of a trend or a continuation of a trend. Start of a trend or continuation of a trend. And if we're using the analogy of a deck of cards, the flat tops and flat bottoms are my trump cards when it comes to structure. Okay. What are other elements of structure? Well, consolidation could be used as an element of structure, right? So there's a couple of things that can be used. Yesterday's high, yesterday's low. These are also elements of structure. So once price clears those elements of structure and it breaks out here in a space like this, then I could take this from here to here and set a TP. And I don't want to make it sounds because this takes practice. It takes clicking time. You know, Ray Lewis used to talk about Tom Brady, about how much he clicked in the film room, right? And he had to do that. He's sitting down with the clicker. Hey, I'm going to tell you something, ladies and gentlemen. Studying these charts can be some boring time. But once you, if there's any musicians, if you remember when you were a young musician in school and they handed you a sheet of paper and it had quarter notes and whole notes and half notes in, and you didn't know what they were. It's the same thing about these candles. It's not that it's hard, it's just new. And keep that in mind. Once you learn the music here of trading, hey man, trading could change your life. Trading can change your life. So this is going to be the end of part one. Subscribe and hit that bell notification. Number one, the subscribing helps out this young channel a lot. Two, when you hit the bell, when part two comes up here, you'll be able to see it and take notes and get to that next level of training on your journey to becoming a really good trader. I'm Derek Taylor. This is Collective Trade House, and we will see you on part two of Understanding Structure. You make it a good day.